Hello to all the traders and investors out there. This is Ruben Rodriguez here from Tenacious Tribe. Hope you guys have had a fantastic day trading. Trading your stocks, your equities, your currencies, your cryptos, and all that. I heard that the S&P 500 was performing nicely, rewardingly, and hope you guys have the chance to catch up some of the profits and retain them in your trading account. Um, having this said, I don't know if you have already seen one of my videos previous prior to this one, but basically what we do here is pretty much technical analysis and price action analysis of trendy assets, equities, currencies, commodities, ETFs. It doesn't matter as long as it has a price action, it has price, it has a chart. I'm very keen on doing it, and I'm the first one advocating that this methodology works with all kinds of assets, all kinds of charts, all kinds of, as long as it got price, ideally volume also, then this works. What follows from this? I mean, yeah, if you're new to this, I mean, what I'm also saying is that I don't give a damn about the fundamentals here. I don't care what's going to be the macroeconomical perspective for the upcoming 10 years in the US market. I don't care about price earnings of Apple. I don't care about the price to book value of BNGO, although I study those also. I've read the Intelligent Investor. I follow what Munger does, what Talio does, what Buffett does, Ackman, Lynch, Templeton, all those guys. This is my favorite method. I think this is the one method that gives a competitive advantage to individual traders because it's very good at reading what. It's a very good tool for you to read what the smart money is doing, what the big guys with big deep pockets and big institutional money behind them are doing. Those guys were the ones able to move the market, and by reading the cues that the charts leave about what these guys are doing and what they think about the market, they can be wrong, of course, but when they're right, I mean, you can just piggyback on them at zero effort. Or in case they get wrong, I mean, you can just step out of the train with very few effort if you're very diligent at risk management and at managing risk and having your run numbers run properly. A whole set of skills that you need to acquire in order to become a profitable trader. What else? Yeah, I also like very much technical analysis because it excels at exploiting misbehaving arbitrages, human behavior. There's a lot of stuff out there about it. Just Google it, read about it. Ideally, don't. I mean, you can Google it, of course, but read about it. There's a lot of awesome books. Let's try, for instance, Animal Spirits or Irrational Exuberance from Schiller. I just read Misbehaving also from Thaler. Uh, what else? Even Buffett is the first one admitting that these these misbehavings happen. That's why he buys at the bottom because there's a irrational panic which he's trying to profit from. This is not specific from technical analysis. I mean, enough talk. I mean, I've been coming to the conclusion that 20 minutes, which is my self-imposed cap, is perhaps too few sometimes. So let's move on. I'm going to try to give you a couple of nuggets of why I like technical analysis, why I use the monthly time frame. Also, another one. Why I do what I do, how I do what I do, and in short, what are the fundamentals behind this methodology. And off we go. The asset of the day is BNGO, Bionano Genomics. And I mean, it sparked my curiosity today because there's a very expressive bullish move year month to date. Price is not particular, volume is not particular ostensible. However, like look at this. Wow, bravo. Month to date, this stock is at plus 86.29%. Then I saw the chart and I was like immediately drawn into analyzing this chart. And I saw that this equity was trending today. So I mean, I hope I'm gonna be able with this video to provide you guys with some further information or some added perspective for your own analysis. Perhaps instigate you to review yours, give you some further ideas on what to look for, perhaps something that you have overlooked, perhaps an idea that can help you redefine your analysis, double check, confirm, deny. Hope this video is useful for all guys out there who are interested or who have BNGO under your radar. And off we go. Okay, first to start with, let's go. Okay, trend analysis and market structure. We can already draw this trend line here. This market is in a downtrend since the beginning of January 2021. Something different, and some sort of anomaly happened last month. I mean, I could even argue the month before, but I mean, this is a red candle, bearish candle where the price closed below this trend line. So you could even argue that this was not an anomaly. This is for sure an anomaly. Price was breaking above this trend line, and this month, I mean, there's been a very big bullish movement this month. Perhaps the momentum has also shifted. Let's see what RSI says. That momentum is also on the upside. Of course, we need to wait for this candle to close. However, we got already good indication that this downtrend has perhaps come to an end, and this market has entered, for instance, into an accumulation stage, and perhaps an uptrend. I mean, what naturally follows from a downtrend is an accumulation phase or ranging market. Step two, let's go. What are our levels? Our levels, and let's use the volume profile analysis today. What are our supply and demand areas? This volume profile analysis is a very useful tool because here you can see these are the congested areas. If you didn't know this already about price, I'll tell you, price is attracted to volume, meaning that if we got this congested area here, volume area here, and this is also a congested area. We see that here there's very few trading or none. Price tends to get attracted to these levels. I mean, we don't have a lot of activity here, but this week tells us that the bears have been here. So of course I'm gonna have to add this one here. These are our relevant levels, and this is our relevant demand area. These are our supply areas. These are areas where the bears tend to step into this market. Let me make this a little bit more clear. But I mean, it is not precise, but I mean, you can also advocate that the bears, that the bears came from this area here. They're already stepping in here with this longer wick. This daily shadow also gives away the presence of the bears. This is for sure a supply zone. If the price gets back to this level, the odds are the bears are going to step in and sell the price once again. If the price gets to this level, the odds are it's going to find some resistance here. And I wouldn't say get back to support. That can happen, but what I'm advocating is that it is not going to pierce like butter to this level. Perhaps something like this might happen, provided the price keeps on following a bullish trend and bullish momentum. Okay. What else relevant for you guys? If you guys are out there are still learning analyzing trending stages, one way for you guys to stop this downtrend is that you got lower high here, lower low perhaps here, lower high, lower low, and now the market structure has come to an end, and we have already a lower an higher high. The only thing is, of course, we need to wait for the end of the month to have this candle closed. We need and only then can we make conclusions about the price action that this candle is giving us. What else? What else can you say about this market? Signs of strength, for instance. What I like very much about these two candles were the two candles that prompt me to and triggered my curiosity to analyze this market. These two candles are a very ostensible exhibit of bullish presence. And let's see. I mean, this is a bar size indicator. it can be helpful for you to try to put in perspective the size of the candles, the size of the candles and the frequency of the candles, either bullish or bearish, tend to give you very good price action signals as to what's the dominant presence in the market. And when you see these very big candles, these very big green candles, bullish candles in comparison to the smaller red candles, you see that the market, the bullish presence is strong in this market. What else can you see here? On the bullish side, the volume confirms these candles. Anna Cowling or Richard Wyckoff are very good at explaining why you need volume confirmation and why you should double check, triple check when there's divergence between volume and price. Let's say you find this one, for instance, it's a weird candle. We got a lot of volume, and you got a very very small candle, very narrow candle. So we don't know whether there was like a lot of investors selling against the buyer, or a lot of or one voluminous seller capturing all the buy orders here. This is an anomaly. This is divergence. This is not. This is volume confirming price. This is volume confirming price. These divergences, for instance, on the upside tend to happen. Let's say you got a very small, kind of like this one here at the top of the trends, and you see like a volume sparking like this one, and you see that this candle of volume, this bar of volume does not correspond to this price action movement. You have a very small narrow green candle. This might mean there was a lot of buyers stepping into this market, but their buying orders were being set against all the sell orders or the massive sell orders that were here from a big seller, a big like let's say institutional investor coming to an end of a manipulation campaign of this stock. Not the case here. Strong candle, strong volume, stronger candle, stronger volume. We got conversions. This market, I mean, this movement is validated. The bullish presence is very strong here. The bearish presence was inexistent at this stage. What else? We got a breakout from the trend line once again. It's a very bullish. It's a bullish sign. On the other side, not many clues. Just momentum is once again on the bull side. Yeah. What else? What we got on the bear side? Because I mean, we have not established, but I mean, if the price is getting close to a demand area, if we get a trigger like this, if we get like a bullish candle like this, our bias should be to buy. Excuse me. However, in isolation, analyzing a trigger, a trend with no context whatsoever, it's not a sound practice. You sort of need to give context to this market. You sort of need to get some clues from this market as to who is dominant, where do they appear, where are the bears, where are the bulls, where they tend to appear. Are they strong? Do they have a strong presence? Where do they tend to appear? So I mean, with this market, bulls wise, we have already established that they tend to appear like in this range, perhaps in this range also, but in this range for sure, as they appeared here. And you can also see that the bears were here colliding against the bulls, and the bears are like no longer nowhere to be seen in this market. Very quiet presence, very quiet presence, very quiet presence. And then the bulls step in, bomb, almost cutting through the price levels like. Like it was a warm knife cutting through butter. Um, okay, on the weakness side, what I don't like to see about this chart is that the corrections or the downtrends are very steep. Look at this. Look at this correction. Normally, if you have a stronger market, you'd see something like this, like a correction, steep, okay, but not as steep as this, and then continues. This was very pronounced, very prominent. The size of the candles, yet again, is not the same thing as the size of the bullish candles, but they're quite frequent here, although very small. It might show some lack of interest from the bears, but they're steady. They're here. They're in this market, and they tend to come from this price level. Say, then look at the week, and even this week candle. I would say they tend to appear from this level, 10 to 12, perhaps 13. This is the level where they step in, and they inflict aggressive movement on their direction. Okay, and synthesizing this information and building sort of a setup here. Okay, we know right this is a value zone. Okay, once again, we know right this is a value zone here. Yeah, and if you don't, you're not so fancy about using a void bus analysis. Look at this touch. Look at this touch. This touch. This touch. These touches are telling you this is a relevant or key level, and this is ostensible price rallying from here. Bears colliding against this wall and staying there. This is also ostensible. Bulls colliding against this wall and got this ginormous tail, and the price being retrieved to the demand area with these two massive sell-offs. What do I see here? I see here on the majority. I see here bullish signs of strength. I see this is a textbook supply and demand setup. You see this is ginormous gargantuan upthrust rally and the shy retrieval back to the demand zone. Yeah, what tends to happen next? I would put this congestion here because there's a resistance here, resistance area around here. Now set the target there. This is a classical textbook supply and demand setup. So what I'm advocating here and what price action advocates here is that there was someone very powerful, someone with a lot of money, and maybe an institution, maybe a ginormous conglomerate of traders, maybe I don't know, maybe it was Warren Buffett with very deep pockets. I don't know who bought this. Perhaps not Buffett. I don't think he's very keen on buying these healthcare stocks or but it doesn't matter. Someone with very deep pockets, some institutional buyer, able to buy so much that the price was immediately thrown against this supply zone. Stepped in here. There was, the retracement with small candles, very shy, although steady. And what happens when the price gets back here? This exact same person that bought you very frivolously with a lot of exuberance is the same person now, or the same institution, or the same group of investors, or the same group of traders that created this gargantuan rally here. And they're stepping in here and receiving our entry trigger here. Of course, you need to let it close. Once again, it's not the end of the month yet. And what else do we got? We got stop loss below this level, because if this person that is buying here, or this group of traders, or this group who are buying at this level, let the price fall below this level and the price closes below this level, it means that they're no longer supporting this market. They no longer think it's effective to buy the stock at this price level, and they're not in the market, they sold already, or they are in the market, they're seeing already P&L, and they're very keen on selling right now because they might be panicking already and seeing red, and they might feel like it's a good time for them to dispose their assets, their positions here. So I mean, you know that you're gonna find bears here. So I'd set this one as target one, target two. Stop loss here, give it some buffer. It gives you decent price risk to reward ratio, and that's it. Supply, demand, supply gets back to demand. Trade it upwards. I'm more inclined towards the bullish side. However, never forget everything can happen with trading. Price might as well hit this area. You know, this area is very congested. Get back here, perhaps form like a descending triangle here and cut below, and all these people, once again, all these people holding here will see like a red P&L or no longer be supporting the market, and then maybe this is a good time to sell. Anything can happen. This game is not about predicting; it's about to be prepared for every instance and being able to identify good risk to reward setups and manage risk and manage emotions and stay steady, stay constant, and trade well. That's it, guys. 20 seconds I got here. Hope you guys have enjoyed it. Hope this was helpful to you guys. Anything you might I might be able to clarify to you, feel free to get in touch. Cheers. Wish you a nice rest of the week. Happy trading.